there's always scenarios, right? I mean, you know, that's the one thing of being an investor. You have to always be ready to be wrong. I've certainly been wrong before, and I'll be wrong again. It would be shocking, but if the Fed, for some reason, all of a sudden said, hey, listen, screw inflation, we're going to start printing money again, we're going right back up. Now, it would eventually lead to the biggest, you know, even a worse collapse. But yeah, I mean, that would be the one scenario.
Wait a minute.
Eventually, right? I mean, you blow a balloon up, you can keep blowing it bigger and bigger. Always remember, everyone, always remember that in big bear markets, that's where the next billionaires and millionaires are made. It's not buying Bitcoin at 65,000 and then watching it flush. It's when do you have the guts to step up in a bear market? I would dare say that people, this is not even close to the feeling when there's full out panic, right?
Okay.
And I think this would be seen, and I would say to you is like, you know, is anyone really that worried? I mean, it's not fun to see your investment accounts down, but is anyone proverbially jumping out the window yet? No one's doing that. There's not this fear because we've been addicted to the Federal Reserve coming in all the time and just saying, oh, you know, yeah, we're down 20, 30%, but the Fed will come out and save the day. What's going to happen when the Fed doesn't do that? And that's going to be where the markets really panic. The problem with the S&P 500, we'll look at the spiders real quick, is that you basically have a trend line. Look at these trend lines here. So you have the all-time high trend line from here to here to here and to here. And we fell right off of that. And then you had this gap fill. But let's even take away that line for now. Just look at it even simpler here. Okay, and again, I'm having some issues taking that away. That's okay. But now look at the upsloping trend line on the spiders right here, and look, we've now broken below it, and this is what we call a bear flag starting to form. So as long as we stay below this area here and we don't break out above that high, that all-time high trend line, I think you got to be bearish into year end and in January of 2023. Necessarily, right? There's always opportunities out there. In fact, bear markets give you one of the best opportunities to buy stocks. I think the S&P 500 has, at minimum, we're looking at going down probably to, I mean, just in 2023, we will easily see the 3,300 level, which is basically the pre-COVID level. So if you go back to COVID, the February of 2020 period, the S&P 500 was trading around 3,300. We've never retraced back to that level. So it makes full sense that at least we'll go down there. That's about a 15+% drop from here. That's the bear bull case. That's the best case scenario per the charts. Really what we're looking at is likely going a lot lower to potentially a trend line, and I'll show my SPY chart here, but we basically could be retracing in 2023 all the way down to about 3,000. I would say 3,000 or just below 3,000 is my kind of key zone for the S&P in 2023. That's the key, right? So, and this is the other thing that people have to realize, that you can look at past recessions, like you can even look at 2008 and 2009, but you have to ask yourself, how did we get out of 2009? And the answer is the Fed came in and bailed us out. They started printing money. They started to do things like that. Now, what happens? How long can a bear market last when you don't have the Federal Reserve? And I think as investors, we have to go on that assumption unless we see inflation get down towards 2%.